Hello and welcome back to a weekly market recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Let's get to it. So this past week, we saw the market up 0.82% after some pretty volatile swings up and down. We are still up year to date, 2.28%. But really, the big storylines for this week is one, the Fed and Jerome Powell, what he said on Thursday. We're going to look at a chart and see exactly what happened to the market as he was speaking. Tech continues to sell off. This is the third straight week of the NASDAQ ending down. But we had some really great news on Friday with the jobs report. So let's get into it. As you can see, throughout the week, we started on a high. Monday was actually really great. So we saw a complete reversal from what we saw at the end of last week, which was, again, tech selling off, this rotation away from tech. And we actually started off Monday with the exact opposite. All those old names, money was going back into the NASDAQ, these big tech names. But as we continue along the week, we really saw that pattern continue of that sell-off. And really, what we want to note specifically is from this point down to here was exactly when Jerome Powell was speaking to the market. So the big question is, well, what did he say that really upset the market? And this is where it gets a little bit interesting and nuanced, because what he said word for word was all really positive. He said, we're still going to be here for the market. We're going to continue buying and everything like that. But the downside is that there was this rumor that came out a couple days before that he was going to extend the bank reserve requirements and basically allow them to use extra cash and as they wish. So they could use that money basically to buy bonds or buy the longer end. And there was this rumor that that was going to happen. And when he didn't say that, the stock market started to tank.
What makes that so interesting is that banks only represent about 5% of the purchases of bonds. So you wouldn't think such a small group would have such an outside influence on the stock market. But as Knight is showing in this chart, it certainly did.
Yeah, and I think it gets back to more the perception rather than the actuality. People want to know that the Fed is going to support the market and support them and even though everything that Jerome Powell said was positive, if he's not, his actions aren't supporting it, or if people are really afraid of where these bond yields are going currently, it can lead to a market panic and a market sell-off, which did accelerate. Now, we also want to note that it did start to recover near the end of the day, but then we started off Friday, opened up great, and then we started to tank again. And that was really surprising to me, mostly because we had such a great jobs report for February. We ended up adding over 300,000 jobs. We were looking to add just 100,000 jobs. So beating it by over 200,000 is actually pretty remarkable, especially for a month where we saw such nasty weather across the nation. Rich, I know that in normal times, bad weather actually is a headwind to people getting new jobs and adding to that.
And also, there's often with bad weather, more people are laid off and there were more applications for unemployment. So the fact that both unemployment dropped and such a large number was a surprise, a positive surprise for the economy. It does show, as always, that the economy seems to be more resilient and better once we get to the other side of this pandemic, assuming that we do.
Yeah, and so we were actually trending below the market. We looked like we were going to close down, and then the market started to rally all the way up and actually passing where we started the week to end in a positive week. So it's definitely overall a pretty interesting market right now. And, the things that were doing really, really well last year have all of a sudden started to sell off. The things that were really struggling last year have started to do really well. And in many ways, it's a difficult market, period. Now, we started this sell-off, especially in tech, around February 17th. And normally the pattern that we see when you start to see a market sell-off, it's like a 6-week period of higher volatility. So what's our expectation? Our expectation is that probably until the end of March, we're going to see this increased volatility. Now, that doesn't mean that we've hit the lows. It doesn't mean that we still have to hit the lows. We don't really know, but our expectation is likely we're going to continue to see these big swings intraday, starting out positive, ending negative, starting negative, ending positive, tech selling off, people rushing into tech. This whole week has had so many storylines. But I think the real main thing of what's on the horizon is stimulus. We have the next round of stimulus coming in, and with that does come the inflation worries, but also $1.9 trillion to help the economy. So I think that could be a way that we start to see this market rebound, is through that stimulus. But Rich, you have any thoughts on where the market might be? Any other catalysts we should be looking for in the next couple weeks?
Well, what I'm observing is that Congress and the political system are looking to do something very different than what we saw under the Obama administration, which was more of a globalization type of emphasis. It does very much seem that the Biden administration is very interested in doing some type of infrastructure stimulus project, which would be very good for the economy fiscally. And in addition, there is continued pressure and almost similar bent to the Trump administration as to bring back and to encourage manufacturing and other higher paying jobs here in the United States. So with
those have
those
some
things,
potentially positive externalities for the market in the future, and it could get us out of this rut. Now, the infrastructure bill is likely months away, but when that does pass, I agree with you, Rich. I think that could lead to some really positive upturn in the market. But as always, thank you guys for joining us this week. If you appreciate these videos, slap a like down below, subscribe to our YouTube channel. We appreciate it. As always, we're here to support you. Your money's here to support you, and we'll see you again next week.